Let's look at some of the best global funds available in terms of both their short-term and their long-term performance. Those of you that know the channel well will know that Royal London Global Equity Select is a top performer, but it's closed to new money. But fortunately, there is an alternative available. So here on the Quilter website, we can see confirmation that Royal London took over the management of Quilter Investors' Global Unconstrained Equity Fund in August 2022. The key difference between the Quilter Fund and the Royal London Fund is in the objectives. So for Quilter, the objective is simply to outperform the MSCI All Countries World Index net of fees over a rolling 5-year period, which isn't really very ambitious considering the extra charges you're taking on and the manager risk that it simply does not perform according to its objectives. When you look at Royal London, they say the objective is to beat the MSCI World Index by 2.5% per annum over rolling 3-year periods, which is pretty unrealistic, really. They must have been smoking some pretty strange stuff the day they came up with that. And that's why I suspect they had to stop the fund having any new money coming in, because they felt that, well, really, this is going to be quite difficult to achieve, although not necessarily impossible. So here we can see the 1-year performance of Royal London Global Equity Select in the orange versus the Quilter Investors Global Unconstrained in the blue, and Royal London slightly beats Quilter, but I think that's just a difference in fees. And here are the top 10 holdings of Quilter Unconstrained, and it's quite an interesting mix. They've all had a good year, some a bit better than most, but overall the blend has worked really well. The problem with the fund is that the managers are a bit publicity shy, and it's really difficult to understand how they go about selecting companies and get some real confidence in what's going on with the fund. It's quite an interesting mix, though. It does seem to be quite an active fund rather than just owning the usual suspects. So here we have the performance of Fundsmith, and it's gone up about 9% over the last year. The performance is slightly beating the global large cap growth equity, which isn't too bad, but it is off its all-time high, which was way back in December 2021. So holders of Fundsmith might be a bit disappointed that, unlike a global tracker, it wasn't able to regain new highs during 2023. And I think the strategy behind the fund is great. I think the communication is very good as well. You really understand what it's doing, why it's doing it, the whole growth at a reasonable price. Some of the recent selections I think are a bit questionable, but I suppose that's always going to be the case. And if we look at the top 5 holdings, I mean, it seems like these ones have done really well, particularly Meta. So it must be some of the tail end holdings, the other 25 or so holdings that are maybe holding things back a bit. But it's interesting, if these have done so well in the last year, what's going to be the outlook for 2024? I mean, it's hardly going to be that Meta is going to deliver another stellar performance. So we might want to be a bit cautious around the outlook for Fundsmith in 2024. And my view is that if you already hold it, it's kind of difficult to say, oh, you must sell it or you must really carefully evaluate it. But I would then also say, well, maybe don't add to it, maybe find something that can complement it in your portfolio, and then you've got a much more balanced performance that could be achievable for you. Here we've got the performance of Blue Whale, which is similar to Fundsmith in terms of concentrated portfolio, probably more of a bias towards technology, a very strong peak in Q3 of 2021, but it's not been able to revisit that peak. Good performance in 2023, but then that's largely recovery. So probably more better off with something like the NASDAQ, where you've got lower fees and you've always got the winners, because the NASDAQ is market cap weighted. So the largest ones always swim to the top. So this has got NVIDIA. Wow, largest position. Oh my God, 9%. That's pretty crazy. And then what's the outlook for NVIDIA in 2024? I mean, who knows? Maybe lots of Bitcoin miners buy NVIDIA chips and the thing just goes crazy, but really, who knows? And then Canadian Natural Resources. It's just quite an odd mix of companies, and it's not really something that I quite have the confidence in terms of what it's doing and how it does it, and could I explain it to other people in terms of what's going on, and the answer is kind of no. So it's interesting to look at, but I would stick with like a global tracker, or I'd even prefer something like a JP Morgan Global Growth and Income. JP Morgan do an interesting exchange traded fund, which is a research enhanced one, and this is the global variant of it. The 1 year performance 16%, so very similar to a global tracker, and the fees are fairly reasonable at only 0.25%. So potentially it's an alternative to something like JP Morgan Global Growth and Income. However, I find that the basis of the fund is really just a global tracker, and so it's not really adding much through this research enhancement. So it's one to maybe have a look at, and it's quite interesting how ETFs are innovating over time, although I think for the moment I'll pass on it. When I'm picking a fund, first of all, I'm looking for solid and stable price performance, something that's ideally beating a global tracker or beating some sort of benchmark on a consistent basis. Next, I'm looking at the objectives of the fund. So generally these are quite vague, but for Fundsmith, he's got some great criteria, and he doesn't like things like banks, and he prefers the solid and consistent revenue from some software companies. Then I'm looking at the selections that the fund has made and whether these seem to match the objectives of the fund. So I'm looking at things like sector exposure, country exposure, maybe concentration within the top 10, and that's maybe something where Fundsmith falls down a bit because it is very concentrated. And then finally, I'm looking at the fees of the fund. Now, I've kind of already covered off the fees with the price performance because it's net of those fees. But if my fund goes sideways for 10 years, then I'm going to be losing out according to the fees that I'm paying. And the whole point of not using a financial advisor is because, well, their fees are just so high that it's unlikely that their selections are going to be worth the thousands of pounds I'm going to pay them every year. So I look at all that, and then I look at how the portfolio fits together as a whole. Come to the excellent website pickafund.com. I've searched on global, pulled up over 2,500 funds, and then I'm filtering on 5-year net return. And number one is our good friend Royal London Global Equity Select. Number two is Guinness Global Innovators. So here what you'll find is that some of the more tech-based funds will try and put themselves into a global category to dominate that category, when really they're kind of a bit of a tech fund in disguise. And similarly with Baillie Gifford Positive Change, here with Baillie Gifford, it's had a bit of a ropey consistency. So the track record is, certainly a bit mixed. The Fidelity Fast Global, that's quite an interesting fund. I think it also has the ability to short markets as well. Didn't do so well in 2023, but I think it's done well maybe through some of the turbulence of the market. And again, Global Disruption, another fund that's focused on like tomorrow's winners today rather than the sort of growth at a reasonable price. If we keep going down, we'll see JP Morgan Global Growth and Income. So some really solid returns here. So that's something that I'm looking for. So if you're a bit older, you want the consistency in the returns, the low drawdowns, and that's kind of what you're getting there. Fundsmith Sustainable. So it's smaller, it's more nimble than Fundsmith, and that seems to be why it's doing well. It's had a phenomenal 2023. Wow, that's amazing. L&G Global 100. So we've covered this one in the past. So it's really just looking at 100 companies that have a true global reach, and that sort of filters out companies in competitive markets where, like airlines, there's dozens of them, and yeah, returns on capital are pretty low. So it does tend to do pretty well, and got very low fees with that one. Actively managed funds that, yeah, one year they might do well, they might not do well. You've got to really research them and understand what they do and get confidence in what they're doing, and then maybe you can have them. But otherwise, it's a little bit difficult to invest in them, because the danger is that the strategy works well for a few years and then it doesn't. Okay, so here we've got Fundsmith Sustainable, and it says the growth is only 6% on a year. So it looks like there's a bit of an error in the Pickafund site. So you always got to do your own research, really get into the weeds of it all. And the thing is, when we look at the top holdings, some of them have the negative returns. So yeah, unfortunately, looks like this one isn't such a great performer after all. Here we've got Fidelity, Fast Global, their active strategy. Pretty interesting performance there, but it's against some kind of flex cap equity, so the comparator is not really the correct one. So what's interesting to look at is when we come to the top holdings, the number one is actually a short position on Rolls-Royce, which you must have taken up fairly recently. So it's kind of interesting, but it's just a bit too esoteric for my liking. You've got to really trust what the manager is doing, and it could be doing anything, and very different from a global tracker. So you don't have the safety of basically the fund is the best, largest companies in the world, and then a few other positions around that. For this company, I would compare it against Pershing Square, where it's a hedge fund, long positions in some quality companies, then trading around it, such as shorting bonds when interest rates go up. And the fund manager, Bill Ackman, he has about £1 billion of his own money in that investment trust, in that hedge fund. So you're really joining someone with skin in the game. And that's probably what I'd go for if you did want to go for a bit more of a wacky kind of out there strategy. So here is Fidelity Fast Global versus Pershing Square over 5 years. There's a clear winner in Pershing Square. But what's really interesting is that if you select 3 years, then it's round the other way. So it just shows that these strategies just can't really deliver the consistency. So it's possible to have funds like this as a satellite holding, small amount in it, maybe try and learn a bit more about it over time, but ultimately you can't really rely on it with too much of your money. Now in Pickafund, I've filtered on passive funds and a size of over 200 million, and that's got rid of some ones like the Global Titans that's only available in euros. So we've got L&G Global 100 number one. We've got some socially responsible stuff coming in next, where I just feel that socially responsible, it's a bit random as to whether it outperforms the bog standard global tracker or not. So you might get lucky with it and you might not. I suppose it's largely underweighting, hopefully, things like oil and mining. So we come down. I'm trying to find, here it is, the quality factor. So that has outperformed a bog standard tracker, but not by much. So the problem with quality is that there's no price filter on it. So you're paying for, rather than growth at a reasonable price, you're paying for quality at any price. So you can buy this on weakness and you might do okay. But if you buy it when the market's a bit toppy, then the returns might be a bit muted for you. And then we just come down, and then we're starting to get some of the bog standard ETFs, and 14% for 1 year, 12% for 5 years. So that's pretty good considering you're not paying much fees and you've got transparency around the holdings. We're looking to build a core holding of reliable global funds, then a smaller satellite holdings of things like themes, sectors, or countries and regions, and then also our non-equity holdings. And we put that together in a well blended portfolio with limited correlation, and then we should have decent returns across a variety of different market conditions. For more details around portfolio construction, go to the portfolio coaching section of my website, ianshadrack.com. My conclusion for the global funds is that the Quilter fund is really the Royal London, just with a different name, slightly different objectives to it, but you can't hold a fund to actually achieve its objectives. Some of our favourite funds are still doing well, things like Global 100 and JP Morgan Global Growth and Income. For people with smaller amounts of money, then a global tracker is holding up extremely well, and that's a great way to just start your investing journey. And if you want to learn more about investing, then I recommend you watch this video next.